Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Hey, Kevin.
Perfect timing for us to discuss Peloton because there was news today on it. They're going to start selling their products and apparel through Amazon. They're cutting some fees for setup and delivery and stuff, too. I don't like that.
It's optional now, is what they said.
Oh, it is? Okay. Because I had to pay for that setup and stuff, so that was kind of bummed me out a little bit. But the shares are still down significantly, up 20% today or so. This stock was near $120 at this point last year, Landon. So we've seen that significant sell-off. They've cut jobs. I mean, are you guys seeing any uptick in data? Because it just seems like everybody's soured on this company as people maybe go back to the gyms or just don't want to buy one at this point.
Sure. I mean, I don't know how you could say they're soured. It was down 91% from one-year highs yesterday. Today, it's only down 89% from one-year highs. So big move to the upside. It's actually pretty incredible, right? 20% the day before they report earnings. You know what? It's wild to think, like, what's the CEO's strategy with that? Would he have saved that if the earnings were expected to be bad, or like why did they release that now? So I'm kind of trying to get into the mind of the CEO here, because that's incredible news to announce right before you announce earnings. So we'll see how that plays out. But overall, the data on this company, it's kind of like a flagship company for LikeFolio, because our data predicted the run up so well, and then it predicted the fall so well. So you can see here the green line is the 90-day moving average of purchase intent, someone effectively saying, I'm buying a Peloton. And that, you can see the spike from COVID. You can see the New Year's resolution spike, and the last one being so much lower than the previous. Obviously, that's a bad sign. And it's just been downtrending very badly over the last year and a half or so. Ever since things started to reopen. I mean, this was a lockdown play. It was in the right place at the right time, and then they ramped up production. Inventory started stacking up as reopening started happening, and consumers started shifting back into gyms. And so now they're in the wrong place at the wrong time. However, they do have some extremely happy customers, 84% positive, one of the highest companies that we have, very, very high. When you compare that to, for example, Planet Fitness, which, they're not exactly competitors, but they're in the kind of the same space. They're at 48%. So 84 versus 48. So this is a company that has very, very happy customers, very loyal customers. Cancellation mentions are extremely low. Their churn rate is extremely low. But you can see here the sort of the problem with the company is the growth. This is that scatter plot that we often put up, where the x-axis left and right is increase in people talking about paying money for something or buying the service. On the left side is not where you want to be here. So that's where Peloton finds himself. Now that y-axis, the up and down, is happiness. Obviously, you want to be higher. So they're in kind of an unusual spot with very, very happy customers, but fewer and fewer customers. So I think what's happening is they're having trouble getting new customers to come in, but nobody's really quitting, or the ones that are sticking around are extremely happy and they're never going to quit. But when you compare that to Nautilus or Exponential Fitness, those other two on there, you can see that they also have very high happiness on the customer side, and they're doing better on the growth side. So I think those are probably smarter places, especially Exponential Fitness, to put your money. But Peloton right now is really struggling on the purchase intent side. They're having trouble holding customers. But this Amazon news could change all of that, right? You can kind of crumple up everything I'm saying and throw it out the window. If they start selling on Amazon and start really getting a lot of new customers that way, this could be the turnaround for the company. It's tough to say where they're going from here, because an hour ago or a couple hours ago, I didn't really know that they had this huge news with Amazon. So now it's very interesting. What do you guys think about this? Is this the turnaround for the company, or are they going to continue on their downtrend?
Landon, I've got the magic number for you, and it's 163 million. And that's how many people are on Amazon shopping. So you can get exposure to that many people on Amazon. Why wouldn't you just do that. Close the shops, their boutiques, like they're doing, and go on Amazon. The question for Peloton, they've dropped the price of the bike now to about $1,400. Why? Because it's all about the subscriptions. That's going to be the future of this company, either the workout videos or the. But it's the subscriptions. It's not the hardware. So the question I have for you and LikeFolio's data is this: is this just a really good small boutique company, and we shouldn't look at it like a crazy massive corporation? Shouldn't we just look at it like a little workout company that's doing extremely well with the happiness of their customers and not expect so much from them, Landon?
Maybe if they were bikes only, right? I think that would be the argument if they just sold those $1,400 bikes and had the app to support. But they've also got a lot of other things that go along inside of that app. And I think that is kind of that's the play to mass scale. I don't think you can make an argument that they're going to have 50 million homes with bikes in them. That's just not going to happen. But you could make the argument that the whole world is going to start using their apps. Like, that's the goal, right? To get everybody on there to do yoga, to do weightlifting or other kind of workouts at home and track it on the app and get motivated by the app and all that. So I think that's the argument for against the boutique claim. Whether or not they're going to be able to execute that, I'm not sure. I think that is definitely the goal. I mean, $1,400 for a bike is very expensive. But of course, when people buy them, they're not quitting. Now, back to the data, if you look at people talking about canceling their subscriptions, those numbers are down about 40%. So that means that less people are canceling than they were in the past. Another interesting stat that kind of matches up with that is that their app usage is also down slightly, like 12% year over year. So slightly less people are using the app, but way less people are canceling the service. So the people are remaining happy. And they've, even though they've got some trends working against them, all the gyms are reopening and everything's going out that way. I think that you're seeing customers very happy with this company as a whole, very happy with the app. And again, the play, I think, is to get to scale using the app as the engine, not necessarily the bikes.
Well, Landon, they actually just announced an increase on the price of the bike and the tread products by $500 August 12th, and they increased in June the price of the monthly subscription by a couple bucks also. So they expect some revenue generation there. They also are not building the equipment anymore. They've off-sited that, where they're going to have this Korean company start to build those. So the new CEO is doing the right things at this point, right? Now he's expanded to have Amazon. Now you have your Apple Watch syncs up with my Peloton when I get on now. So it seems like they're doing the right things. To Kevin's point, is this just a brand? I think of it this way. If you have a Peloton, right, it's almost like you carrying around a Starbucks as opposed to a Dunkin' Donuts. You want to carry around a Starbucks cup, right? Because you want people to see you wearing your Lululemon and drinking a Starbucks, and you got a Peloton at home. I went through houses during open houses. They have a fake Peloton bike in a corner of a room to show you what you can do with it. So it is a brand, but when you look at that scatter plot, this is kind of what I wanted to get at. The scatter plot that you have, where the positive commentary on Peloton, very, very good, right, by the consumer. But it's in the far left instead of the far right. Is this basically a picture of you get what you paid for? Because Planet Fitness, while it's cheap and it's on the bottom line there, purchase intent and percentage intent is increasing. You're getting what you pay for basically, and Peloton is that higher priced item. Is that typically what you see? Because I think that upper left Peloton circle, wasn't that in upper right about a year and a half ago?
Oh, yeah. I mean, they were screaming top right a year and a half, 2 years ago. And it was unbelievable, the change. And remember, this is change that we're talking about. Right. So this is not total number of customers. This is the change from a year ago, how many people are saying that they're signing up. So less people are signing up for Peloton. More people are signing up for Planet Fitness. But to your point, they're much happier with Peloton. They love this product. So I think what we're looking at is sort of, the boom that they went through with the lockdown was amazing, and it was huge for the company. It got the stock up to 120 or so. And then as the lockdown ended, people decided to go out and go back to gyms. And it's not like they threw their bikes away. The ones that bought are still loving it, but someone who's deciding to start working out today is far more likely to go to an exponential fitness class like Pure Barre, Cycle Bar, or join Planet Fitness than they are to order a $1,500 or $2,000 piece of equipment from the internet. So they're just more likely to do that, and that's what we're seeing in the data. It's just that less and less people are signing up. Now, one thing I have to say is that the decline is actually slowing. So we had a pretty sharp decline about a year ago, 6 months ago, somewhere in there. But that decline, that rate of acceleration to the downside has decreased, and we're beginning to start to curve a little bit on that bottom. We're not bottoming out, but it's starting to slow down on the decline. So this combined with the Amazon news, this could be a positive inflection point for the stock.
You guys have an earnings score going into this report, Landon?
We do. Despite all of the numbers pointing down, it's actually plus 27 because what the earnings score measures is change in that acceleration. So even though it's going down, it's slowing down that decrease and it's beginning to bottom out. And who knows? I mean, this next time we come on the show 3 months from now and talk about Peloton, I wouldn't be surprised if it was much higher because of the Amazon sales.
Yeah, well, it's getting a boost now, and this is probably one of the first partnerships that they have with a specific retailer in Amazon. They could open this up. All right, great stuff as always, Landon. Appreciate it.
All right, guys. Thank you.
All right, that's Landon Swan, the co-founder of LikeFolio, helping us break down the data. Kevin.